Hello everyone. This is the pre-market report video for today, 27th February 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday early morning, S&P Global released the press release that they expect Chinese manufacturing and the steel demand to fall compared to a year ago. As a consequence, they are projecting a dip in the Chinese manufacturing PMI data for the February month. This impacted negatively on the Asian stocks and also reduced the global momentum. In line with that, yesterday Nifty opened lower and dragged down mainly by IT stocks, banks and in addition Asian Paints. Here, regarding the IT stocks negativity and banking negativity, we already discussed in the last video. For IT, there are a number of reasons. Friday Nasdaq negative close, WTO ministerial conference, and more importantly, yesterday our commerce minister failed to participate in Dubai, rather he stayed in India, which kind of created huge buzz in the WTO conference since India is leading the negotiation of trade related issues for fisheries and IT products. Then banks. Again repeating for everyone benefits, Goldman Sachs downgraded some major Indian banks citing the earnings erosion of 2 to 5%. In addition, Asian Paints was the main dragger. At present in the paint business, there are only two major players, one Asian Paints and two Berkshire Paints. Then during the weekend, major textile manufacturer Grasim Industries launched their own paint business. Now, this addition of Grasim and also they showed the aggressive plans for their paint business expansion to their shareholders raised the concerns that Asian Paints might lose either the market share or the profit margin due to the increased competition, which in turn made the stock to drop over 4%. On the positive side, L&T got the new construction business with a worth of 2,500 crore rupees, which supported their stock price to increase 2.5%. Overall, sector-wise, IT and metal down 1% each, while bank and pharma down 0.5% each. On the other hand, oil and gas, power and capital goods up 0.5 to 1%. Again, metal was down because of the negative Chinese influence. About institution, FII and DII both turned as net sellers, but both of them net sold only marginal value. FII net sold for 285 crore rupees and DII net sold for just 5 crore rupees. So those were the quick takeaways from the yesterday's market. Moving to US, last night the number of new house sales data comes as 6,61,000, which was less than the analyst forecast but greater than December month. So we can say it's somewhat market favored. In line with that, all three US major index opened positive. However, negativity in Google, Berkshire Hathaway and the profit booking made all three of them to close negative. First, regarding Google, they made an announcement that they are going to relaunch their AI tool in the next few weeks as it was paused during the weekend due to the inaccuracies, which pushed down the stock by over 4% down. About Berkshire Hathaway, earlier it opened positive due to their good quarterly earnings, but soon it erased all its gain and dropped near 2% since US government warned their subsidiary power company for a lawsuit. Here, both Google and Berkshire Hathaway is an index heavyweight, which in turn negatively affected the whole US overall market. In addition to this, coming Thursday, US government is going to release the PC inflation data. At present, already market can't able or struggle to digest the January month higher consumer inflation number. So this expectation fear created some profit booking. In the end, Dow Jones down by 0.16%, S&P 500 decreased 0.38% and Nasdaq was the least affected one, 0.13%. In case of VIX, it haven't changed any, same 13.75. About oil, again, there was an escalation in Red Sea and shipping disruption which increased the oil price by 1.5%. At the time of this video, WTI crude trading at $77.5 per barrel and Brent crude trading around $82 per barrel. Regarding Indian ADR, all four major Indian ADR stocks closed negative but around 0.5%. Here, both IT stocks and ICICI Bank closed less negative than it closed in Indian market. So if we calculate the 1 month arbitrage, then all of them indicating flat to positive trade today and no fresh negativity. About GIFT Nifty, it's also same as ADR. Today morning at 3 a.m. Indian Standard Time, it closed at 21,183. Equating it to the spot market, it's indicating flat to 30 points positive opening. So those were the things happened yesterday. Now let's discuss new Indian market related info. There are mixed info about banking stocks. So first let's discuss those. During August 2023 period, in order to control the rupee volatility, RBI imposed the ban on Indian banks for the dollar rupee arbitrage trade. As a consequence, in the last 1.5 quarters, it increased the mark-to-market losses. Yesterday, as per Roche's report from their known source, RBI now eased those restrictions to 2 public sector banks and 1 private bank. Here the problem is, in the Roche's report they haven't mentioned any particular name of the bank for the general public. However, I'm guessing investors might able to get those details and that might influence those banks on the positive side. Second positive, there was a rumor that Paytm might be partnered with 4 banks such as Axis Bank, HDFC, SBI and S Bank. So whichever banks get those will get some cascaded benefit. However, on the negative side, RBI imposed a penalty on SBI for not following some complaints regarding some depositor education awareness funds issue. Here, the fine amount is only 2 crore rupees, but the problem is the failure to comply. Overall, let's see which news influenced the market today. One more thing, Canara Bank Management Board approved their stock split for 1:5. Generally, this is considered as positive because of increased stock accessibility. As a summary, last night US market closed a negative, but global momentum haven't deteriorated that much, and also Indian ADR and GIFT Nifty indicating the positive opening. In addition, after some days, there are some bank related positive news, and also technically Bank Nifty looks positive than Nifty, which we will discuss in detail in a moment. Moving on, as per stock open interest, Berkshire Paint, Delta Corp, Ramco Siemens, IDFC, First Bank and UPL got an increased open interest along with a negative close, indicates the short build-up. On the other hand, Bosch, Sun TV Network, HDFC AMC, Glenmark Pharma and Tata Consumer Product got an increase in open interest with a positive price close, indicating the long build-up. About the things to look out, just now, Japanese consumer inflation data was released by the Japanese government. The data came as 19-month low value, and in fact, the core inflation came as just 2%, dropped from 2.3% on December month, which I consider as good. But not too sure how market will take that, since the analyst was expecting 1.9% and the actual data was slightly above but still dropping. So most of the Asian market will be reacting to it, and possibly that will spill over to Indian market as well, either negative or positive. Then not much during our market time, and finally for US in the night, durable goods order for January month and CB consumer confidence data for February month are the important items we need to keep an eye out today. Coming to technical, Nifty opened 40 points gap down and hit an intraday low of 22,075 during the day. However, finally it closed above 22,100. Thus, on the daily chart, Nifty formed a small bearish candlestick pattern with lower high, lower low formation. So basically, it's yet another consolidation sideways and range bound between 22,000 and 22,200. In addition, the daily and hourly momentum indicator had a divergent signal yesterday. So all those indicating range bound move as a more probable scenario for the next few trading sessions. Just for info, in the comment section, many have asked the question, what's the meaning of divergent signals? It means, for example, at present, as per daily momentum indicator, now it got the positive momentum, or we can say buy signal. Whereas on the hourly chart, the momentum indicator had a negative or sell signal. So basically, both different time frame indicator indicates the different direction. Hence, it's a divergent signal. Now, suppose if the hourly momentum turns to positive anytime today means, then it's a positive crossover. Similarly, if the daily momentum turns to negative anytime today means, then it's a negative crossover. If we go further deep, any momentum we can divide that into 5, such as strong sell, sell, neutral, buy and strong buy. So even if it moves from sell to strong sell, it's a respective side crossover. I hope it's clear now. Back to the technical. As we discussed earlier, Nifty is in a range bound consolidation 22,000 to 22,200. So any breakout on either side will confirm the future short term directional trend. Hence, as long as Nifty is trading below 22,200, the weak sentiment or the consolidation is likely to continue, and the drop below 22,000 might push down the Nifty to around 21,800, where the yearly average historical PE ratio 22.5 is present. While on the higher side, 22,300 is expected to be the key hurdle. Then in case of Bank Nifty, it was also under pressure and continued its downtrend for fourth consecutive session. Thus, on the daily chart, it formed a doji kind of candlestick pattern indicating indecisiveness among buyers and sellers with volatile trading session. However, despite the volatility, it continued to take support at around 46,500, which coincides with 20-day exponential moving average and the Fibonacci retracement. Hence, as long as it stays above 46,500 to 46,300 on a closing basis, the overall undertone expects to be bullish. The immediate resistance on the upside is situated at 46,800, and a decisive break above expect to create quick short covering and propel the Bank Nifty towards 47,000, where the highest call option open interest is concentrated. Regarding the options front, the maximum call option open interest was at 23,000 strike, followed by 22,500 and 22,300 strike, with new call option writing at 22,200, then 22,900 and 22,100 strike. Thus, from the options data, it's indicating the support is around 22,000 to 21,900 level. Whereas on the put front, the maximum open interest was at 21,000 strike, followed by 21,500 and 22,000 strike, with new put option writing at 21,500, 22,100 and 21,900 strike. Hence, 22,200 to 22,300 is expected to be the key resistance. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any decision based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers educational purpose only. Thanks for watching.